Ladies and gentlemen, welcome. Today is the 2nd of September 2021. For time flies. It's 3:54 local time. This is Australian dollar on the 1 hour chart, 0.74051. As you can see, shorties came in the market. They are finishing them up, going for the stops. I try to capture the stop hunt here on camera. Should just be a matter of minutes. So the same happens to $. We had shorties in the market, so that's why there's a dollar weakness. Tomorrow in the afternoon we have the US unemployment data. The unemployment rate is expected to go down from 5.4% to 5.2%. So I think in the next 10-15 hours there will be more dollar weakness. They will finish up the stops above the highs, kick out these shorties. Then when tomorrow the news comes, there will be some house cleaning, whipsawing, and then eventually some kind of normalization, especially if longies get lured into the market. Some variation of that. It's rather predictable. I did some scalps today as well and record them. So that's the overall flavor of the market right now. And this is like also typical that on a Friday we have the big news items in the afternoon. And then the smart money wants to make sure that all sides get cleared before, during, and after that news item. So yeah, this typical stop hunt, medium term stop hunt, some short term stops in between. Short is trying to sell a reversal down, which is a very bad idea. Doing exactly the wrong thing. Trying to sell into the momentum and even placing the stops above the high. This is bait. These will become victims of the stop hunts of the smart money algorithms. That's just what they wait for, because they will just continue the up move, take out all these tight stops and the short term, medium term, long term stops, which will kick out the dumb money sellers at a loss or give him a margin call. Once that has been done, once the high has been retested and cleaned, and the news have to be used, or rather abused, for some house cleaning, then the smart money will just wait what the dumb money does next. Normally they get lured into some kind of dumb money switch, thinking, okay, then we just buy the market, and then that will lead to a dumb money switch and a down move back into the range. The second scenario, less likely, would be that more shorties get into the market, especially if the US data is better for the dollar than expected. For example, lower unemployment, which is then exploited by the smart money algos with a repetitive up move and cleaning of the high again and again until those shorties have been cleared. As someone said the other day, those setups are quite repetitive at some point. I mean, if you look at the live trades, and I've made other videos about it, including one why I summarized the 3 main setups on this channel. There are similar things happening all over again and again and again and again. At the end of the day, it's a 2-dimensional chart, you know, this is price and time, and the dumb money buys or sells and puts the stops close or far, and at certain levels dumb money positions and stops accumulate, and other factors come into play, like the meter levels, which are included in the video course, which are not explained publicly. But in a nutshell, that's what drives Forex these days in this highly manipulated, highly algorithmic market. It's not supply and demand or anything like that. Forget about this. It should be clear by now. If you're one of the people who still didn't get the message, please go back to the educational videos, okay, and work your way up. I've shown you how you can do this in a very efficient manner. Get yourself some popcorn or coffee and go through the educational videos and understand what's going on. Then study the live trade videos, and then study the other content, and have fun being able to use this leading information to predict what happens next to trade. Protect yourself against stop hunts and those nasty manipulation moves. Lately I had a lot of fun scalping lower time frames, and I will in the future make a video about how you can do this based on these charts. Also, my automated trading is doing really well at the moment. I will do a separate video about this. And as you can see here, my analysis is better than ever. Has always been very precise, but this year in particular, it has been super precise. The reason for that is that, yeah, things are basically just repeating over and over again, believe it or not. As you can see, it's not rocket science. It's some content you need to study and understand. And if you want to go further and use it for your trading, you need to practice a bit, but that's about it. Euro dollar looks pretty similar to Aussie here. We often see that. That's why they have some correlation right now. And they're basically in some kind of squeeze scenario where the shorties get squeezed out of the market. You don't want to be short in such a market. It will lead to increasing losses every day, every night, and you freaking out and having a bad time. That's not what you want. You want to outsmart the market. All these people just trading the way they do, as you see here in front of your eyes, are ignorant. They don't understand how this game works. They have not found this content here. Most of them never will. And I guess it's just the nature of the beast. Most people tend to be ignorant, and that in this game here is coupled with losses again and again and again. That's why those horrible numbers are published, that over 90% of retail traders in particular lose. And a big chunk of professional traders loses as well. The ones who really make the big money are the algorithmic market makers. That's one. And then the people who have understood the game, like here. That's why I call this also elite. Smart money elite. It's not the majority, and it never will be. In theory, if this would get a lot of attention and people would understand it, in theory the market could at some point change. At this point in time, it seems unlikely that this will happen. According to my experience, also the ignorance of many people is infinite. One has to accept the reality as it is, and then draw the right conclusions and adjust whatever you do yourself accordingly. Okay, that was the only way to create all this here. Okay, to be radical. First stage, to just observe how all of this interacts, how it works. Okay, to not come with any theories or narratives, but to just accept how these mechanics play out. Okay, and secondly, to document it, to understand overall how one can derive the general rules from it. And then in the third step, to derive the actual general rules, which then allow you to predict the moves in the market. Yeah, not the other way around. So that's why I studied economics myself, and that can often be harmful as a trader, because you come with some theory, some model which doesn't really match the reality of today, which maybe from 50 years ago, and you try to force that approach, model, way of thinking on the reality of today. That is a very bad idea. That will not end well. You will not be able to predict anything that way. And in this game here, if you try to trade, this will quickly show as negative P&L. As simple as that. That's what's so nice about this game. Your reality at the end of the day is a black and white number. So don't do that, okay? Don't come with your theories. Now you will say, well, wait a second, what about all the fundamental analysis which analysts publish here and elsewhere every day? And well, you can conduct fundamental analysis. Yeah, you can do that. I mean, as you know, I also comment on this now and then. I comment on the central banks' policies and what they're trying to do, and even also some fundamental factors sometimes are incorporated. But the way those are incorporated in the game is via the economic plausibility. Okay, watch the video on the economic news. The algos exploit that. You can see that even with the economic news results. There was a time, I think it was around 6-7 years ago, where it was easy to trade news, even without anything, where depending on the news outcome, you could scalp and so on. This is over since around 3-4 years or 5 years. People have been kicked out of the market who have been trying that, not thinking that this will ever change. These days, for example, let's say tomorrow, if over the next 10 hours another bunch of shorties come in, trying to predict that the dollar will get stronger, and if tomorrow the data actually is in favor of the dollar. So let's say suddenly the unemployment rate is only 4.5%, not 5.4. Okay? So the US economy is doing much better, so the dollar should gain some value. Well, if the market is full of shorties, guess what? The algos will not let the market go down. They may do a quick pin and then go quickly up and kill those shorties. And then people are confused. Hey, why did euro dollar and Aussie dollar, why did they go up? The dollar should get stronger based on this number. It's a clear economic causality, correlation. Well, they don't understand that it's all about the manipulation. And they create narratives retrospectively. That's really funny. And that's also a high level of ignorance. They try to convince themselves, this was already priced into the market or some BS like that. That's ridiculous. Okay? I mean, if you have no knowledge of all this stuff here, and if you have not seen anything like here, how it works behind the curtain. If you have an average IQ, average intelligence, you have economic knowledge, you go to the markets, okay, and you analyze how the market reacts to those macroeconomic numbers. You must be a fool if you don't come to the conclusion that there is no correlation anymore at this stage, okay? Now, make no mistake, the algos try to maintain some degree of economic plausibility. That means, let's imagine the other scenario tomorrow. The market is full of shorties, okay? Over the next 20-25 hours, around the world, the dumb money sells Aussie dollar, euro dollar again and again and again. Now there's a news result. It's actually a 6% unemployment rate, so much higher than expected. Worse for the US economy as thought. Guess what? Boom! They will just push those markets up. Aussie dollar, euro dollar, they will make a big up move, take out all those stops in one go, kick those shorties out. And what happens? People say, yeah, of course. The data was really bad for the dollar. So the dollar lost strength, and therefore the euro dollar and Aussie dollar went up. You understand? They have no clue. So retrospectively, they see some plausibility, not knowing what the actual driver of that price move was. Namely, the activity on the dumb money side and those positions accumulating in the market, which the algos detect and then take out. Now, if you have 500 news announcements over a time period, as you can imagine, a certain fraction of that will fall into this category and the other one will fall into the previous scenario. That means when you analyze this data on a naked price chart, you will find, or you will convince yourself to find, some kind of economic plausibility. Now, if you measure this with statistical methods, you will find that it's quite unstable, okay? It's R squared values high, as statisticians would say. There are big deviations from the mean. There's not a good correlation between those economic factors, which implies that certain macroeconomic models, which are accepted as the mainstream body of knowledge, do not hold up well in reality. Certainly not in the last 5 to 10 years, where algos have taken over this game completely. So, at the end of the day, that's how the reality of today is. Now, someone was asking the other day on this video where I went through all markets, equities, crypto, metals, oil, higher time frames, etc. Will Forex change? Well, that's a very interesting question. But here's one possibility I would like to express. I'm not saying it will be like that, but what if this game here doesn't change at all, but the other markets actually become more similar to it? Wouldn't that be the more logical conclusion? Because at the end of the day, the more efficient markets become, and I'm not talking about efficiency in the academic sense, I'm talking about efficiency in terms of killing off the money. The more algorithmic other markets become as well, other financial markets, the more in the long run they should converge to this type of market structure, not the other way around. You understand? This could even include crypto as well. Now, but I don't want to speculate about this. At the end of the day, the market structure, for example, from crypto is completely different. At this stage, it's still decentralized. It works in a different way. But it is one possibility that in the future, I'm talking about the next 10, 20, 30, 40 years, something like this is one scenario. Now, the other alternative scenario would be that Forex at some point changes and gets influenced by approaches such as crypto. Now, I wouldn't rule that out. Seems a less likely scenario. And the question is, how would that play out? Okay, the market, in order for that to happen, the market would need to change completely fundamentally. It would need to have completely different rules, not as it's set up today and since decades and a long time. But everything is possible, okay? But I would be excited if that happens. I don't believe that in our lifetime this will really happen, because why? This whole reality as it works right now is a system which is self-sustaining. The big players pay huge fines every 5, 6, 7 years. They let off some people saying they did it on their own initiative. They replace them. They continue making money with this kind of forex rigging every day. Now, the result is that the market is highly liquid. It's open 24/7. Okay, it's cheap to trade. Transaction costs are cheap compared to stocks or ETFs or anything else. Yes, the market is accessible. The market is very deep, so that means these are the positive points. And in a way, you could argue that, well, if the structure should ever change, those factors would change as well. That's correct. The other thing some people say is it has to be that way as it is right now. And I would actually agree with that. Make no mistake. I'm against unfair market manipulation. I find it unethical. It makes the rich richer, the poor poorer. But at the same time, this manipulation may be necessary. It may be necessary to some degree at least. It's an unregulated market. It's a decentralized market. It's over the counter often. The market makers in this game would need to take full price risk just to earn a spread. This doesn't make much sense, obviously. They will need to have some kind of price control. And by the way, this includes brokers as well, okay, who hedge against clients and so on. Anyways, I leave it to you to judge yourself. I'm showing you the reality here. I'm explaining it. I'm exposing it. I give my personal opinion, but the ball is on your side. And feel free to comment. What do you think about all this? Do you think that, this is not how things should be? Or do you think that this has to be like that? That there is the Pareto principle of 80-20, and in this market it cannot be any other way? You could argue from several directions, okay? It's interesting nevertheless. What I find interesting personally is, I find it just interesting how all this unfolds in front of our eyes now here with our little community, and how at this point I'm still able to show these things. That's interesting. I find it interesting how people like you react. I feel really good when I see how people understand it and are able to make their own good predictions and trade well. I find that very motivating. Over the last years, there has been a handful of people who have done that. And that's really cool. And that makes me proud, because it shows also that my work here helps other people to become better traders despite all this unfair manipulation going on. They understand the knowledge, the content, they pick it up, and they use it in their trading. And that's really cool, because that shows that, if one sits down and really gets deep into the subject of forex trading, one can come out on top. Predictions are possible with a high precision. Manual trading and other approaches are possible. But I also realized that there are barriers to entry in this effectively. Not in any formal way, but in informal way. Most people these days, they have a short attention span. They don't sit down and study stuff. We live in this social media generation where people check their phones every few minutes and get dopamine rushes, and everything needs to be short term and stimulating and so on. That seems to be the new culture in the majority of society. There's the smaller group of people who actually sits down and studies things and goes deep. But the majority is quite, I don't want to say superficial, but short-term oriented, okay? And that's reflected in a lot of things. Even in the internet, on YouTube, when you watch people's videos and all that stuff, it's reflected in that. It's all a bit of a show. It's all a bit like selling people a dream or whatever. I don't want to get too far off topic, but you know, it's very, very apparent. I feel that my generation was a little bit different. Maybe that's an illusion, but I'm happy that when I was a teenager, for example, that we didn't have these smartphones in our hands. It definitely has some negative effects on people. When it comes to finance, I mean, it is super exciting. The time we live in is super exciting. We see old structures being challenged and broken, and it's fantastic. We see old cartels and monopolies being broken up and new things emerging. The way people do transactions, the way people do commerce has changed forever through the internet, through alternative systems of money, through a more level playing field, information accessibility. Things are moving in the right direction there. There's less and less unfair money to be made, which is good. So there are also very positive developments. So in our system, worldwide, the capitalist system, things are changing, and it makes sense, because the more alternatives there are, the more competition there are, the more global connectivity there is, the less entities can exploit certain unfair advantages, okay? Advantages which are based on exclusive information or exclusive accessibility and anything like that. So in that sense, you could argue that things become more efficient on the global level. And those kind of informational arbitrage opportunities, you can really say, disappear more and more. That's reflected in a lot of things. Even in other markets, you can see that many hedge funds are going down. Hedge funds have been caught, using unfair advantages again and again. Hedge fund fees have gone down. People have more direct access to markets. There's a more diversity of financial products. Trading costs have decreased. And other phenomena which I've covered in other videos. So, either way, nevertheless, I hope you liked my little rant here. Now and then it's good to do that, to give you a bit of an insight how I see the world. Feel free to express your own view and comment if you want, or write in the forum or whatever. We can't ignore this central bank-based system we have going on right now, and things is going to happen in the next month with the central banks and this overinflated market as well, and stocks, etc. So stay tuned with that. Inflation will become a big topic. We talked about that. This whole pandemic thing is going to stay. There will be new variants and consequences, and probably even lockdowns and whatnot. So this is another thing which will go on. So this is the world we live in right now. We have seen that a lot of global events do not impact the markets much. For example, events in the Middle East, like now in Afghanistan and so on, they don't have big impact on the market. But it has been like that for quite some years now. So when I look over the last decade or so, financial markets have changed a lot in that sense, okay? Correlations have been changing a lot. Even this V pattern in the stock market was very rare, very unusual. And also there you have your own kind of manipulation with the central banks. So everything manipulated in a way. Okay, enough. So keep in mind, tomorrow afternoon we have the US news, unemployment, non-farm employment change, average hourly earnings month on month. Then afterwards we have the ISM services PMI. Remember, watch inflation data. Above all, stay safe.